Okay. Damn it. I spoke this whole time and nobody heard me because I didn't put my screen on. Thank you for... Okay, so this company, Intuitive Machines, is the first entity to land on the moon since 1972. So the only time anybody's ever landed on the moon was we did it in 1972. Now this company, Intuitive Machines, built a spacecraft that did land on the moon last Thursday. On February 22nd, they did land on the moon. That was confirmed. It's a big deal. Stock went up 16% on Friday, the following day. The stock is still down overall. It's a SPAC, so it was $10 to start. Is this chart right? Oh, so it got up to $40. I thought it only made it to $20. Okay, so it hit $40 at one point, right after it started trading. Then, like most SPACs, it crashes and burns, and it got down to below 3, I think a little over 2 at the low. Like a rocket ship, pun intended, the stock went up a lot the past week. So it was $8. Then it went to over 11. It has regressed a little bit. It's down below 10. No sound. You can hear me now, right? That was earlier, right? You know, many times I made that mistake where I don't click on my icon. I have to click on my my face icon in order to be part of the stream, and I forget to do that. But anyways, so this is a big deal for society that we landed on the moon again. It's been over 50 years. And I think it's called Artemis. Okay, there's a program NASA put together in 2017 called the Artemis program. They want to get more exploration on the moon. They want to get more people on the moon so they can learn about it and do as much research as possible. So this company has 3 contracts with NASA. So they are receiving funding from NASA. So that's a great way for them to get cash. Because if you're getting funding from the US government, maybe you won't need to dilute shareholders. But that's not the case. They are diluting shareholders quite a bit over the past year since they went public. They went public via a SPAC, a special purpose acquisition company. So it looks like when a stock is flat-lined at $10 for many, many months, it's a SPAC. That's how you pretty much know it's a SPAC. And then usually they announce that a SPAC is a shell company. It's a public company, but it's a shell. It does nothing at all, no business operations at all. Its only purpose is to acquire a private company. So they go into the they look around, they try to find a private business that wants to go public. And they found it in this case, Intuitive Machines. And usually what they found the company and they're in the process of taking them public. And once they announce it, the stock shoots up. So it got up to over $40 right away. And then once the SPACs starts operating and reporting their financials each quarter, then it goes down usually 90+% in value. That's just how SPACs operate. And most SPACs never rebound. They stay at $1, $2, $3. They do reverse stock splits, so they stay above $1. Because if a company has a stock price below $1, it may get delisted. And that means it gets put onto the pink sheets where there's less trading activity, which is not good. Delisted doesn't mean you go out of business. It just means there's less eyes on your stock because there's a lot more people looking at the NASDAQ and New York Stock Exchange and London Stock Exchange, major stock exchanges. Not the penny stocks, most people don't look at. And most big funds do not invest in penny stocks. That's another bad thing about being a penny stock. If you're below, usually $10 in price, if you're below $10, a large fund like Vanguard will not even buy it. That's one of their parameters. It has to be above a certain number. How does this company make money long term? Ray, that's a good question. How do they make money long term? Now, the problem is with this company is that what is the business model? I think the business model, and correct me if I'm wrong, but it's to take people to the moon, just like an airline would take you to Florida or another country. It's to charge a fee to take passengers to the moon. That's going to take a long time to happen because it's a risky proposition to go to the moon. A lot of people have died trying to go to other to go to outer space, either the moon or other planets. Space mining. Well, Cyan, well, the technical definition of a penny stock is above $5. That's the definition of penny stock. But I was just saying, if you're a fund, like a mutual fund, you usually have a parameter of a certain dollar amount. Some funds will only buy stocks above $5. Some funds above $10. That's what I meant. Like when we do our stock screeners, we're looking for certain PEs, certain things. When they do their stock screeners, certain funds just totally eliminate anything below X dollars. So, some funds use $8. But a good thing about this company that most companies don't have is that people want them to succeed. When I say people, I kind of mean NASA and the US government, because NASA has this program. And I think even if they didn't have this program, NASA wants to learn about space. That's the purpose. And especially the moon. So we want to get people to the moon so we can learn about it. So they do get funding. They have 3 contracts with NASA currently. So that does fund their operating expenses because they have to pay, mostly it's payroll, right? But they have other expenses too. They have to buy fuel for the rocket ship. They have to buy parts to build a rocket ship. There's a lot of expenses involved. Just one customer to get to date. I'm not sure about that because I think they have some customers because they have revenue and a few million of revenue, which is a small number, but 12 million is a number. So, and I'm not sure if it's the U.S. government solely as giving them that revenue. I think they do a lot of research and let's see if they even tell you who. A lot of times you can't really. They don't tell you who their customers are. It's kind of like private. But let's see if they give. Does anybody know who their customers are? Commercial payload customers. It's definitely the U.S. government, but it could be some private or public companies that are looking to get information about outer space. So I think they do have a good number of customers, but I'd be curious because that is important. They have a lot of experience, apparently. They just got rid of this guy, Eric Sally. He was a CFO. I read an article, I think it was December, the article, or maybe November, because this is their third quarter earnings. So this came out probably in mid-November. They're reporting earnings next week, full year 2023, and it's projected to, they always lose money. They have negative operating income every year. Just so you know, they did have positive net income in the third quarter of 2023. And if you watch other YouTube channels, they'll say, wow, this company isn't doing great because they have positive net income. They're profitable. But they're not really profitable. They have an operating loss of $23 million, revenue of $12 million, cost of revenue, that's all their expenses directly tied to these operations, these space operations, 26 million. And then they have 10 million of G&A. So they have an operating loss. The only reason they have a net income for the third quarter is they have these warrants and these, it's like kind of like earn-out liabilities. It's kind of like when they went public, they gave people these kind of like options where if the stock goes up a lot, then those investors will get paid out. But if the stock goes down, then the investors will not get paid out. And the stock has been coming down, so their warrants and options are in their favor. So they're posting these gains on their income statement. You see 36 million and 10 million. That's just for the quarter, but for the 9 months is 61 million and 10 million. And on the statement of cash flows, you'll see that reversed out, 61 million and 10 million, because those are non-cash items. So if you want to know how much cash they generated for the first 9 months of the year, you take their net income of 10 million and you adjust it for the non-cash items. So they actually lost 23 million of cash. What line shows how much cash they have in the bank? Well, that's on the balance sheet. It's called cash. So they have 41 million of cash. Now, this is a big red flag. Maybe one of the biggest red flags. Current assets, 50 million. Current liabilities, 100 million. So they're upside down. Their current ratio is below 1/2, which means they don't have enough current assets to get through the next 12 months. Now, this is not a problem if you're Coca-Cola or AT&T, because those companies have lots and lots of cash, millions and millions of cash coming in every day. They're profitable. They make money. This company doesn't make money, so they need to take on debt or dilute shareholders just to get through the next 12 months, which I don't see being a big problem because they just landed on the moon. They're going to get funding. If you ask me, are they going to be able to fund their business in 10 years from now? Maybe not, if they're still running out of loss. But right now, there's money. They're not going to have problems getting funding. So my question is, how can they compete with Elon Musk, SpaceX, and Jeff Bezos? How could they compete? Well, they did. They landed on the moon, and they've proven it. The only other person to land on the moon was in the early 70s when we did it. But they accomplished it, and they seem to have a pretty good amount of knowledge. I mean, I'd like to learn more about the people who run the company. That's something I'm trying to get better at. Where's that chart? I just showed you it, where they showed the. Okay, right here, Eric Sally, CFO. I wonder, he must have got fired because I just read an article. I'm going to pull it up right now, where, well, they're never gonna say something negative. It always does positive spin, so you don't really know exactly what happened. It says, Eric Sally is departing as CFO for personal and family reasons. It's always because my family needs me, and to pursue other business opportunities. It's kind of like when you're selling a business, you never want to say the business is struggling, I'm not making a lot of money, so I want to sell it because it's stressful and I'm losing money. No, it's always I have my spouse is ill, and I'm concerned and I need to be home. You know, it's always something like, oh, I have personal medical problems. It's never the business. It's always something besides the business. But anyways, so Steve Vontur will take over as CFO. He's the controller of the company. He's joined in 2022, so less than 2 years he's been there as controller, and he was part of the team that brought them from a private company to a public company. How do you form a view of how much cash this finances they have left in terms of time? Do they have 6 months of cash left according to cash burn rates? How do you do that? Well, I'll show you. Well, you go to the statement of cash flows. So in the first 9 months of 2023, they burned 23 million of cash. They also spent 27 million of PP&E. So that's free cash flow, operating cash flow minus CapEx. So they had a $50 million cash burn in the first 9 months. So that's 17 million a quarter, let's just say. So that's their cash burn. I don't know if expenses will go up or down, but right now they have a 17 million quarterly cash burn. The stuff down here is not part of their day-to-day business. If you're able to learn a lot more about the company, understand how the company operates, you can identify maybe you know that preparing for a space launch cost X amount of money. I don't really have that type of knowledge. I can maybe do some research, but just from what I know, it's a $17 million quarterly cash burn. They have 41 million of cash. So they have, a little over 2 months, a little over 2 quarters of cash. Although they have debt of 20 million that's due soon. So that could put a monkey wrench on their as of September 23rd, the weighted average interest rate. So they're paying 10% on this debt, and it's due within 12 months. I don't know when it's due. We could probably poke around and figure it out. So this is definitely due within 12 months, this debt. So yeah, I'd say a couple of quarters. I had lunch with 2 space industry people, biggest idiots I've met in my life. That's interesting. That's really funny that you say that. How do you form a view of how much cash finances? Example, do they have 6 months? So my question is, how do they compete? Which line shows how much cash they have in the bank? So it's really interesting. I think it could be a good swing trade. For long-term investment, I don't see it. I mean, it sounds great that they land on the moon, but it's hard to monetize something like that. Like they could charge for, they could charge for their R&D. Like they could do research for other companies, and they probably can make money that way. But I'm not sure how to monetize this. Possibly in the long term, it could take another 20 years to actually start bringing people to the moon and charging them a fee. But it's going to take a lot of, it's right now, there's probably a lot of liability. And I don't know if I guess you can start a business and take people to the moon. I'm not sure. I'm not sure if there's rules against that. I don't know if, obviously you can do anything you want personally, but to start a business, you have to have, you can't violate any kind of laws or things like that. Just like how we have these rules in place where you can't fly to these countries. Remember, especially during 9/11, even now, certain countries, there's rules against airlines flying to these countries. So even though we kind of live in a free society, there are rules. If anybody wants to join the live stream, you can always let me know, and I could send you a link if you want to give your talk about this company or talk about anything. Like you can join it right now or in the future. Is that 20,000 that's due to repay the whole amount, or assume an interest payment to pay out the loan? No, that's due. That is 20 million that's due within, you see, current maturity of long-term debt, 20 million. That's due within 12 months. I don't know exactly when it's due, but it's in the current maturity section. This is principal of the loan. They also have 10% interest. So that's like probably 22 million that will be due. This is a weird thing. Let me know if anybody knows why. I didn't have that much time while I was shooting a video. But while I was shooting my video on this, I saw they had 100 million of assets, 160 million of liabilities. So I was thinking they would have negative equity of 60 million, but they have negative 350 million of equity. And so I didn't really have time to look into this while I was shooting a video. But does anybody know? Does anybody follow this company and know their balance sheet well enough to know why? Like if you look, like this makes sense. December 2022, 67 million of assets minus 124 million. So that's 57 million deficit. So that's 57 million right here. Assets minus liabilities equals equity. But it doesn't work out on 9/30. 100 million minus 160 million. It should be negative 60 million here, but it's negative 346 million. I think they just made a mistake. Because if you sum up 27, 258, negative 12, and negative 333, that is negative 60 million. It looks like they just summed these two numbers. Let me see. I think that's why they just made a mistake. I'll do it in Excel. I mean, does anybody care about this stuff? I think I'm the only person who cares about stuff like this. So assets, 102,973. Liabilities, 1,629,48. So A minus L, that's their equity, negative 59,975. But I'll list everything in the equity section. I love catching mistakes on companies because I'm like, they're a big company. They, and I caught their mistake. Although maybe they meant to do this. I don't know. Maybe I'm wrong. So yeah, so if you do sum up these right here from 27 million to negative, that's everything in our equity section. And the sum is equal to negative 60 million. But it looks like they only summed up these two. So it's negative 346 to, oh no. Okay, this is what they did. Okay, because when I was shooting a video, I don't really do, I do a little preparation, but most of the time I just learn as I do the video. They summed up everything in the yellow. They didn't sum up these two numbers. which would have given them assets minus liabilities. I do care. It suggests they may need to restate. I don't think they need to restate. Maybe they need to just make a note to the shareholders. But this is not like maybe like a note, but definitely not a restatement, because this is not like, if it was something like they forgot to add, the revenue was, they forgot to add some revenue or something, or they forgot to add some expenses. That's pretty significant. But this is just more of a, I guess they exclude the mezzanine, like the preferred stock. I'm not sure why they exclude it, because they do call it shareholders' equity deficit. Because, okay, so I think they did it. I think it's right. I think this is what they meant to do, because there was no mezzanine equity last year. So that's why it worked out. What's up? Kyle, right? Kayal, Kyle. iFlow, what's up? The only aerospace I have at the moment is Ricey, moving slowly but surely. I do like Rolls-Royce. Are you British? Khaled, of course. Khaled, are you British? Why'd you buy Ricey? Well, you're not British, because you wouldn't have said Ricey. Ricey is the American stock. If you were British, you would buy RR.L. So you obviously bought the Pink Sheets one. Can you explain mezzanine debt? It's just well, mezzanine, I guess, is not like the bottom floor of a building. I don't know where they get the word mezzanine from, but I think that's what mezzanine is not like the bottom. It's so like preferred stock. Let the Stone, please. So the capital structure of a business is usually like senior debt, then senior secured debt, then and this is kind of like who gets paid off in the event of a bankruptcy. Senior unsecured debt this is the order of payment. Like, they get paid first, they get paid second. If there is money left over after, like, paying your employees and like those paying your electric bill, things like that. And then you have like preferred, which I guess is why they call it mezzanine, because it's not on the bottom level, but it's kind of like set. It's right above the bottom floor, right above the basement, the mezzanine floor. And then you have common stock. So this is your cap structure. So 1, 2, 3, 4. So that's how they get paid, from 1, 2, 3, 4. And let's just pretend this is how much is owed. You have 100 million, 150 million, 300 million, and then whatever. It doesn't really matter, because you don't owe common stock anything. So say after the company goes through the bankruptcy process, they have 500 million left over. After they kind of sell their factory, they sell all their assets, they liquidate the business. They have 500 million left over. So they will pay all $100 million to whoever holds senior debt. They would get paid out in full. Then and now there's 400 million left over after paying that. So then they would pay the entire unsecured debt, because right now there's 150 million of unsecured debt out there. So they pay that entire amount, and there's $250 million left over after that. And then they can't pay their entire preferred stock holders. Those people will get the rest of the money. So they will get paid 83 cents on a dollar. So if you own $100 of preferred stock, you would get $83. Now, if there was, so this equals 550. Say there was $600 left over. Then they would get paid out in full, the preferred shareholders. And then after paying the preferred shareholders, there's $50 left. And that money is given to the common shareholders. So say you own stock. Say your stock is like, you pay $20 for it. You might get $1. Or generally, common stockholders get nothing. Usually there's not enough money left over. But that's pretty much how when you go bankrupt. But the reason you buy common stock and not debt is because there's a lot of upside. You could 10, 20, 50x your investment. When you have debt, you just get paid like the senior debt holders may get paid 10% interest because they have the least risk. And the unsecured debt holders may get 12%, and the preferred stock may get 15%. Preferred stock doesn't get, they'll get like paid in dividends. But do you guys know what preferred stock is? It's like a hybrid of common and it's a hybrid of common stock and debt. So it has both features. There is some upside potential if the stock goes up, but it's limited. And they get a fixed dividend payment, where if you're a common stock, you don't get a dividend unless the company wants to give you a dividend. And some companies never give a dividend. StoneCo. Yeah, preferred shareholders get paid out before common shareholders. Everybody gets paid out before common shareholders. Usually common shareholders don't receive anything, usually. Sometimes preferred shareholders don't receive anything. And usually preferred shareholders receive they receive a dividend, but if the company does not have enough money to pay the dividend, then it kind of builds. Like they keep track of how much they owe. So if they have to pay you $100 a quarter and they don't have money to pay, they keep track of it. So maybe if they go bankrupt, they'll owe you $5,000 in dividends if they never paid you the past few years. So that's why common stockholders don't usually get money, because if you're a preferred shareholder, you have to get all your dividends payment. Every dividend payment you should have gotten before anything's given to common shareholders. No, Berkshire is not preferred stock. It's common stock. 1683. The A and B is common stock. 5.3. they're identical. The A and B. The only difference is 50 B shares. No, 500 B shares equals 1 A share. It's 500, right? Or is it 50? I forgot. Yeah, A and B identical risk. It's just the price is different. Look at that. StoneCo making money. Positive cash flow. Certain, like Google has a couple shares like GOOG and GOOGL. Those are different because I forget which one of the shares does not get voting rights and the other share does get voting rights, but they pretty much else identical. Oh, this is a Brazilian company, right? Shit, I gotta convert. That's fine, I guess. 950, 1.1, 1.7. Okay, FX rate. What's the Brazilian to US dollar conversion? 0.2. Okay. This is interesting. I'm at 13. That's interesting. Usually Brazilian stocks trade at a discount. I think it's, yeah, well, I'm at 13. They're trading at 17, so that's a 29% premium. StoneCo is a bit risky. That's a fintech, right? StoneCo. HOEGF. HOEGF. And thank you for the donations. It really helps. It motivates me to do videos. This is, yeah, StoneCo was really struggling for a while, right? I don't like a lot of screens up. I like less screens up. It stresses me out when there's a lot of screens. This is not, okay, I'm not too familiar with this HOEGF. Okay, 1.95, 10.2. Okay, this might be a little harder. Oh, they do have positive free cash flow. That makes it easier. Wow, I wonder why they're projecting such a decline. And this is in US dollars. I thought it was an international company. Well, that helps. It's 0.5, 0.5, 0.3. HOEGF. Huh. Nine, 10, 10.8. Yeah, I mean, looks like it's undervalued. I'm coming up with 20. It's trading at 10. The RSI is a bit high, so it's getting to the point of being overvalued. If you follow the RSI, because generally, not that it's like a hard and stone, like a hard rule, but above 70 is a sell, below 30 is a buy. But I'm trying to follow these indicators more to understand them better, but I'm still not totally convinced they have much merit. But that's just me. HOEGF. Let's see what Simply Wall Street says. Oh, they're at 25, so they're pretty close to me. Simply Wall Street. Let's see what analysts project. Analysts are at 15. They also say it's undervalued. I wonder why their revenue is projected to decline in 2026. Let's see. What kind of company is this? A deep sea transportation of roll-on, roll-off cargoes worldwide. They offer transportation services for agricultural, automotive boats, break bulk, construction and mining equipment, machineries, power equipment, rail cars and tramways, trucks, buses, equipment handling, and trailers. It also provides short sea terminal and supply chain management services. They're 100 years old almost, and they're a Norwegian company. Isn't there like a midstream Hoegh? I think there's a midstream company, right? Yeah, Hoegh LNG Partners. I don't know why this is not working, but yeah, I've heard it, Hoegh LNG. Interesting stock. Do you guys buy pink sheet stocks? I don't think I've ever bought a stock on the pink sheets, but maybe I will. Okay, so Intuitive Machines. Let me know if you want me to do a DCF. If you want to donate, I'll do a DCF. And thank you for anybody that's on the stream. Secured multi-day launch window beginning January 12th. This is from November 13th, so this is a few months old. Because I know next week they're reporting fourth quarter earnings. They secured more than 87% of workforce for NASA's 5-year, $700 million omnibus multi-engineering services. That's a big contract. Did you hear that they were on the moon and it tipped over the spacecraft, and they weren't sure if it was if they were safe. I kind of heard something about it. I'm not exactly sure what happened, but I guess everything went well because they landed and okay, so revenue 12 million. So they're not pre-revenue, they are generating revenue. I'm not sure exactly how they're doing it, like what they're getting paid for. It's okay, it's primarily by NASA's commercial lunar payload services. So I guess it is mainly NASA that's paying them. That's their one customer. They do have a backlog of projects. So they have a lot of iFlow, LNG. Did someone say Tellurian? What a crazy stock. Do you think they'll get to see their project? Yeah, Tellurian is a mess, right? A lot of Tellurian lovers. I remember when I did a video and they got so mad at me for saying anything remotely negative about Tellurian. It's in pretty bad shape. I remember when I did a video when it was like 10 and I said it was like 5 or 4, but it's really come down. It did bottom now at 40 cents. LNG. That yeah, Cheniere Energy. That's what's his name's old company. LNG. Yeah, that's true. If you like money and you don't want to burn it, stay away from Tellurian. Yeah, I remember I was pretty bearish on Tellurian. I've done a few videos, but they just go nuts, those Tellurian holders. They get so defensive. It's not like it matters if I say a stock. I don't even have that many viewers. Even if I did have a lot of viewers, you're allowed to give your opinion. And if you are bearish a stock, what's wrong with that? But they get so defensive. It's kind of like it's like if you think something is true, why do you get so mad if somebody says it's not true? Like, why do you have to defend it so strongly? 38 billion, 158. That's a lot of 38. Yeah, 38 billion. I was gonna say 158 billion market cap. That's sounds a bit high. Yeah, I remember Tellurian. I remember I did a few videos. I did 5 now. So it was $3, and I was $1.87. So that was pretty good. That was a pretty good. And they're like, no, they went crazy. They were going the comments, and I don't usually. It's not like I like bash companies. Like I don't like. I just kind of sometimes I say negative things, but I just kind of just go through the financials. I don't really give too much of an opinion. The problem with the revenue projections is they don't account for the Driftwood LNG. Nobody is buying the stock based on what they have on the ground. It's going to be a totally different company, Driftwood project. Good breakdown. I bought it based on the potential I saw in the future. Can you make, my opinion, it's really the wrong way to go about analyzing TEL. TEL needs a probability-based model. Honestly, pointless. You spoke of the company as though it was already shipping gas around the world. You did fine in the current snapshot, but you've missed the point of this investment. How are the signed deals not factored into your cash flows? Anyway, based on your headline, which is accurate, I expected different. Because my headline was like revenue up 1,000% because it went from like 30 million to 300 million. The stock will be at 525 by the end of the week. Get in now while you can. Well, it wasn't that negative, I guess. So LNG. Thank you, the real Gary Gensler. 3.7, 1.92, 3.7. I think it's a little undervalued. I raised the WACC a little to make it a little more the model a little more conservative, I guess. But it's a good company, LNG. I mean, they move a lot of product. They December deck. Tell me the truth. Is that a ticker deck? Diversified Energy Corporation. Oh, okay. Deck. Deck. That's a high whack. They must be pretty risky. Oh, it's a British company. Hmm. 248, 212, 235. 248, 212, 235. 1236, 591. Is that right? 1236. $15.8. Okay. $248, $212, $235. Maybe let's make it a little more conservative. Lower the revenue targets a little bit. That's a really high whack. Even, I mean, it seems a little risky. I'm at $30, even though they're at 12. Why is it so undervalued? This is a really new company. In December, they IPO'd. It was up to 16. Diversified DEC operates as an independent owner and operator of producing natural gas and oil wells, mainly in the Appalachian Basin. The company is involved in the production, marketing, and transportation of natural gas, NGL, crude oil, and condensates. Its assets consist of conventional, unconventional natural gas liquids, and oil producing wells, and natural gas gathering pipelines located in Tennessee, Kentucky, Virginia, West Virginia, Ohio, and Pennsylvania. They were formerly known as Diversified Gas and Oil and changed name to DEC in 2021. Okay, they were founded in 2001. So they just went public. Were they public under a different name? I wonder why they just IPO'd. DEC. It's an American company, but it also trades on the London Stock Exchange. Okay. So they 23 years ago, they were established. Management grew over the next decade. It looks interesting. I'll give you that. It's a small market cap, 590 million. Wow, 28%. How could it be? How could it be so high? Well, they never paid a dividend, but the yield is 28%. Is that because they announced a dividend, but they never paid one? Had to bring you something interesting. 29% yield. So they announced a dividend, which is only 16% payout ratio. So they never paid a dividend, but they will be paying their first dividend. Let's look. If you want to know for sure, because I think the websites are correct. I'm not saying they're wrong, but if you're ever not sure, because sometimes they do calculate things. It's based on a computer calculates it. It's not like a person sitting there. So sometimes they use, like, they'll take the dividend payment, but it's really an annual dividend, but they calculate it quarterly or vice versa. But let's just see. They would have announced it. Return of capital. Okay, here we go. Okay, we're pleased to announce that following November 13th, 2023, of the interim dividend for the 3-month ending, the company tends to offer shareholders with an opportunity to elect how they will receive their return of capital of $42 million. The company will return the same amount in the third. So it's the directors' current price. So they can waive this dividend payment and have their the company can purchase their shares. Diversified declared an interim dividend of 4 cents per ordinary share of 1 British pence. Right? Pence, right? That's, I'm saying that right? 1 pence. Each in respect for the 3-month ending, which was adjusted per ordinary share for 20 pence following the company's consolidation. Oh, did they merge with a British company? Is that why they're doing this tender offer? So it's not really a regular dividend. It's a tender offer, and you could elect to sell your stock or accept the return of capital. Purchase price to be paid by the company will be 105% of the average market value. Interesting. So let me know if you own stock shares of this. Let me know what you elected to do. Did you take the tender offer? Let's see. Issued a press release as part of the dividend payment. It plans to launch a tender offer to repurchase 42 million of company's ordinary shares. Sometimes these news articles explain it in English, exactly what happened. I think I understand it, but it's not, they don't really explain it well in those press releases. It's going to give shareholders a choice as it rolls out $43 million return of capital. So it wants to give $43 million to shareholders, either, I think, in a dividend, or they can buy back your stock. Yeah. I did HOEGF a few minutes ago. I forgot what. Okay, HOEGF. Yeah, I come out with 20 on that one. It's trading at 10. Yeah, I was just looking at this DEC, but yeah, HOEGF is seems like it could be okay. HOEGF also pays these really big dividends. Wow. Wow. So you're getting this massive dividend? 29%? That's 95% payout ratio. Yeah, it's a really good dividend. I mean, is it sustainable? The stock is down a lot. Let's see what they say with reference to the announcement, diverging fortunes for Oslo's car carrier. Full year dividend could. Oh yeah, you have to pay 25% taxes, but still, that's a pretty big dividend. It seems like it's worth it, even if you have to pay 25%. So this lunar Is anybody buying this week? Lunar? They yeah, that'll happen. It'll go up when lots of buying activity. It's like when Meta announced they were going to pay a dividend. A lot of dividend investors bought the stock because some people only invest in stocks that offer dividends. That's just how some people operate. So there's a lot of dividend investors who bought Meta, so it helped them. And when a company gives a dividend, it's not like they're gonna. It actually hurts the company because they're giving away cash, but it's a sign. Investors see it as a sign that the company's doing well. But don't let it fool you, because there's a lot of companies who pay a dividend every quarter, and some of them are not doing well. But they have to keep up the dividend payment. Sometimes they use debt to pay dividends just to not scare investors. Because if they cut their dividend or eliminate it, then they have to dilute so many more shareholders if the stock price is low. That's really the main benefit of a stock price going up for the company. That's the number one benefit, is that they can issue stock at a higher price. It's just like when we buy stock, we wouldn't want to sell our stock when the price is really low. So if a company's stock price shoots way up, that's a great time for them to sell stock, because they have to dilute less shareholders. But if stock price crashes and they need capital, they have to do a lot of dilution. It went up when investors. Thanks, Gary, and thank you, Scott. I would not know where to start. Is there a symbol that you personally like? A symbol? Like the RB symbol? What do you mean, a stock symbol? Thoughts on Google offering a dividend in the near future? They seem to have an excess of free cash flow. Non-investment advice. I always start with solid blue chip, Visa, Amex, JPM, Costco. Yeah, I've always said, since I started the channel, my favorites, the stocks that I have total confidence in, Meta and Costco. And I kicked myself because I could have bought when Meta fell. I should have, and I got scared because I had so much invested in them already, and I was down. On some I bought at 300, but I bought a lot at 150. So even at 150, I was down a little bit. But now my portfolio went up so much because of Meta, and I should have just stuck to my guns and not have been scared to keep buying when it fell. But yeah, Costco and Meta, and I don't own Costco, but in my wife's account, I bought Costco on her account, so that's up like 110%. So that's really good. In her account, I bought Amazon. I went heavy Amazon, heavy Costco. This is a while ago. In my account, I went heavy Berkshire Hathaway and Meta. So my portfolio is doing a lot better than hers. That's the problem, right, Mike? You need money. If you don't have money, it's like when I was younger and stocks were cheaper, I just didn't have the money to buy them. And also, when a stock goes down, even when you do have money, it's all tied up into stocks. So what are you going to do? Sell something at a loss to buy something else? Meta 85. I know. It was so obvious. Same thing with Netflix. Like I went heavy on Netflix in my wife's account. Because I wanted to buy Netflix in 2012, but I just didn't have. That's when I was starting my business. So, and it was. I remember, and when Netflix, it peaked at like almost 700. So I was so upset I didn't get in, and then it got cut in half from 700, and then I bought it. I went in fairly heavy at 388 because it was down almost 50% at that point, maybe like 40%. So I got a 388. It was in January 2022. So right around here. And then after a couple of months, I was down almost 50% or 40%. So I'm like, do I buy more? It's just hard. It's hard to buy more. But I knew it. I knew it was a good buy at 388. So I should have bought more, but that means, what do I sell? But whatever, you no matter what happens, you're not happy. Whether you make money or lose money, you're not happy. Yeah, that was a nice special dividend they offered. Netflix, SOUN. That sure is a popular stock, right? SoundHound. It's at 1 billion market cap. Look at the RSI. It's a sell, a really high RSI. So in June of last year, it was over $4, and then it bottomed out. It was well under $2 just this month. So it doubled this month alone. We should all go all in on sound. You sold my dogs for Palo Alto. Oh, Palo Alto. That's a good one. Pan W. Do you guys think they're like the only semiconductor company? Well, not the only, but they really got hit hard with earnings. The stock crashed. It was at its all-time high right before earnings. At 370, and then it really went down. What happened? I don't even know exactly what happened. They must have missed badly. Palo Alto Networks earnings. They must have either missed badly or really, really bad forecast. Okay. I should do a video on them. Okay, it went down 28% February 21 in response to the company's latest earnings, second quarter. The cybersecurity revenue rose 19% year over year and exceeded analyst estimates by 10 million. Its adjusted earnings grew 39%. So wait, what happened? So why did it go down? Palo Alto's headline numbers seemed healthy, but it followed up its earnings beat with a reduction in guidance and a jarring shift in its long-term strategy. So that's two ways generally a stock goes up. If it reports really good earnings for the most recent quarter, or its guidance, like for the following quarter and the following year, are really good. Those are the two ways the stock goes up. Like those are two like real ways. Of course, the stock could go up if just like a ton of idiots buy it, but those are two sustainable ways the stock goes up and stays up. Let's review the bear and bull cases. It seems like a buy, right? Bad guidance. Palo Alto's billions revenue growth decelerated significantly in the first half of 2024. That slowdown can be attributed to the macro headwinds. Cybersecurity. You would think, how does the semiconductor stock go down? Unless you're Intel, how can it go down? Intel's like, everybody hates Intel after the now that Nvidia is so strong. I mean, Intel led semiconductor throughout the 90s and the early 2000s. They were the #1 semiconductor company because of the PC boom. Everybody started buying PCs, their own computer in their own home. That was unheard of before the 90s. Even in the early 90s, it was kind of unheard of for a person to have a computer in their home. It's mostly companies had computers, some of them in their office, not even all companies. But then the PC boom with IBM selling all these computers, and they made the semiconductor chips for those personal computers. And then everybody started getting their own computer and playing games from home, going on the internet. Some people were doing, for work purposes. Now those semiconductor chips are crap. Nobody cares about Intel's old PC semiconductor chips. They want AI. They want like these really intense graphics and brilliant. Got my Nvidia and heavy AMD. I think shares could rocket if it gives up manufacturing to UMC or TSM. Yeah, Nvidia actually is not overvalued. They're trading at a decent level. Still a pretty high price to free cash flow, price to sales, and PE. But it's not that bad. It's actually, they're trading at a lower multiple than other companies in their industry. AMD, right? Isn't AMD trading at like 200 times earnings? Tesla was the big boom for a number of years. Now it's Nvidia. I sold my Tesla. I bought Tesla in my wife's account, not because I wanted to buy Tesla, but sometimes she picks stocks, and it seems like, and that wasn't a good one, because we paid $300, and then it went down pretty low. We ended up selling at about like a couple weeks ago, like 200, so at a 30% loss. But Tesla, I don't know. I know if you're a Tesla bull, you probably think this is a great time to buy Tesla, but I think their run is over. I just don't see. I mean, they may come up, but being a car manufacturer is not an industry where you have these huge margins and high profits and lots of cash flow. If you want a lot of cash, you be like Google or Meta. You sell ad space, really high margins, tons of cash flow. Like they're like, I mean, like Google has like 300 billion trailing 12-month revenue, 74 billion of profit, 70 billion of cash flow. That's a lot of cash for a year, $70 billion. Tesla, which was, I think, bigger than Google at one point. Tesla has 100 billion of revenue, which is pretty good, 15 billion of profit, and 4 billion of cash flow. It's not like a big money maker, cars. They tend to, it's an industry, it's not as bad as airlines. Airlines never seem to make money. It's just so hard. Car manufacturers aren't that far behind. It's a tough industry to make money because it's expensive to make cars, and there's a lot of like, there's a lot of time you have to spend preparing, and a lot of competition because there's so many other people selling a similar or better product. It's a tough industry. Nvidia, I totally missed the mark. I didn't realize how profitable being a fabless company is. Their margins are just ridiculous. Even sold my TSLY. I heard Intel has invested heavily in ASML's nanometer technology. Will take about a year for the 2 nanometer tech investment to gain traction. Maybe watch Intel. Yeah, I mean, I wouldn't be surprised if Intel comes back, but it's like kind of like, it's almost like moving a mountain at this point. They're just so, they have all these factories, all this infrastructure built. It's really hard for them to get to that level of Nvidia. Self-driving. The what's it called? This company, Intuitive, they're going to do ride sharing on the moon. So you can get your own, you can get a Uber on the moon. Let's talk about a unique, come on, Tesla Robotics. Have you seen Boston Dynamics? But I think a lot of people didn't see Tesla as a car manufacturer. They saw them as a technology conglomerate. So they saw them as a company that not only makes cars, but has the infrastructure to charge all the cars in the market. And like who's the number one? Who's number one in EV charging stations? I thought NIO was like really strong. The leaders, because those are the companies to invest in. Because that's a very scalable, profitable business. EV charging stations. There's a lot less competition, a lot less infrastructure. Like the manufacturing is much easier than building cars. Building cars is very complex. Not as hard as building aircraft or rockets, but it's fairly complex to build a car. It's not that easy. It's not like building furniture. You don't hear people dying from sitting on a couch. But there are plenty of people who die every single minute or maybe every hour from driving on a car. It's not, sometimes it's the car's fault. Usually it's not. It's a driver's fault, but the car company still has that kind of liability and negative perception when someone dies. ChargePoint, no thanks. Blink, Evgo. So I think investors were looking towards Tesla as the company to really build all that infrastructure for not only EV charging stations, but other solar projects as well, like those wind projects, all these the solar energy. TSMC pulled ahead of Intel because Intel was interested in producing 3 nanometer chips. As a few years back, TSMC invested heavily and it paid off. Intel are keen not to miss the. So TSMC is the king of semiconductor foundries. They're the largest foundry, and so if you, how come it's not? Oh, TSM. So if you want exposure into semiconductors and you think Intel Nvidia is too overvalued. You could, of course, go to AMD, but Taiwan Semiconductor, they make all the semiconductor chips for Nvidia. Nvidia doesn't actually they don't really manufacture much. They do some manufacturing, very little, but Nvidia gives all their manufacturing business to Taiwan Semiconductor. They actually manufacture the chips. So this is a good and Taiwan for semiconductor for many years was number one. They were the largest semiconductor company, from maybe 2015 to 2022. They were number one. They were the largest. Then Nvidia took over. After Intel kind of fell off a cliff, Taiwan became the dominant player in this industry. Just think about results. Doesn't make it happen. But it's very confusing to me. I mean, I understand what the purpose of a semiconductor chip, and I do understand that Nvidia makes the high-end chips, but I have no idea how to really understand. I would have never known. I guess maybe if you told me a few years ago, Nvidia's semiconductor chips are so much better than their competitors, I would have just said, well, why can't the competitors just design a really good semiconductor chip? Why does Nvidia only is able to design it? I apparently they figured out how to make a better chip. I'm not sure why the other companies can't make as high quality as Nvidia. And even if you told me this several years ago, I wouldn't have known that. For instance, if you could make a better car, like a really sleek BMW, that doesn't mean everybody's going to buy your car. That's what I would have thought. Just because you make a better product doesn't mean everybody buys it, because they just can't afford it, or they don't want to switch over to. I can afford a Tesla. I just don't want to. I'm used to getting gas in my car, and I don't want a car that I can't drive for more than 2-3 hours without running out of fuel and having to deal with finding a place to charge it. So Nvidia's chips are really popular because they use a lot less power than competitors. That's good to know. Once again, I wouldn't have understood. I understand what you're saying, but I would have no way to connect that to becoming one of the largest companies in the world. I would have never. When Tesla was starting to become popular, in 2015, 2014, when their cars, I understood that. It made sense to me because electric vehicles, help the environment. People use less gas. Maybe they'll save money. I got that. I understand it. I still didn't buy Tesla though. I guess because it was overvalued, but it made sense to me. Don't really understand how these semiconductors. Now I do, I guess, because of AI. I do see it, but a few years ago I wouldn't have connected the dots. But I guess that's part of the learning process. We have to learn this stuff. Oh, Jensen Huang was working at AMD. That's interesting. I didn't know that. Didn't Kramer? Hey, Mark, what's up? I heard Kramer was saying that he's been so bullish on Nvidia for 10 years now, and he even named his dog Nvidia. He was trying to tell everybody to buy Nvidia. Is that true? I feel like he's saying that now after the fact. I didn't know, maybe he was pushing Nvidia, but I don't know anybody who was talking about Nvidia before 2020. Hardly anybody. I think the first time I heard of Nvidia was around 2020. Well, the first time I really kind of learned about them. I probably heard about them before then, but I never really even thought about looking into them. After college, he was director at LSI Logic and a microprocessor designer at AMD. He founded Nvidia with Chris and became CEO and president. He owns, I'm surprised he doesn't own more stock of Nvidia. You would think he would own like 20, 30% of the company. But I guess once you get bigger, you have to give away equity. He earned $25 million as CEO in 2007, ranked him the 61st highest paying CEO. Wow, in 2007, that's before they became big. Are you charting stocks? If so, can you chart CLDI, MNPR if you have time, please? What does that mean, charting stocks? Like looking at their stock price over a certain number of years, or does that mean like looking at like, yeah, Palantir. I just did a video on Palantir, right? That looks that's promising, right? So this is just their stock price. But is this what you mean by charting? Or do you like to look at like candlesticks or like look at that. I can't really. Well, look at that huge gap down. Wow. It went from 8. Where's that gap? Okay, right here. It went from 8 on 9/12, and then the following day it went down to 4. So it's a 50% gap down. Did they ever fill that gap? Did they ever break through 4 again? 90% of gaps get filled. They never filled the gap. You know, they say, you ever hear that? 90% of gaps get filled. So it never filled because it never came back up. Its RSI is 60, so it's a little overvalued, but not too bad. It was really low. So this is the way. So look, RSI, look how low the RSI is on February 9th. So let's see if we bought it on February 9th. With the RSI at 17, if we bought it at 58 cents and we sold it, we could have doubled our money, I guess. Maybe RSI does work. But it was trading in the like the RSI was trading in these 20 to I wish they made a chart easy to read. It was in the 20s for starting January 22nd when the stock was $1. So I mean, if you bought it here, you would have been flat because the RSI still stayed in the 20s. Do you guys follow the RSI? I'm trying to follow it more. like a year. So when do you buy it? It's kind of like buying the stock. It's $2. Okay, it's really low compared to last year. Do you wait for it to come down to like $1? What about like 60 cents? Like if you bought it at $1, thinking that's a great buy because it was $10 just in middle of 2023, it has come up, but yeah, the MACD, the VWAP, I don't really look at those, but I look at like the moving averages, like the 30, 40, 50-day moving averages. But I started looking at RSI. I'm going to try to look at those others. Yeah, I'll be right back. Give me a minute. What's what website do you guys look at? I'm paying for FinViz, but I don't use it that much. I don't know why. I guess I'm so used to Yahoo Finance. So is anybody buying Intuitive Machines? Because they landed on the moon last Thursday. That's the first time anyone has landed on the moon since 1972. The stock went up 18% on Friday. Look at all this volume. There was like no volume before February 9th. And another thing you have to be what? Yeah. Sometimes these websites are wrong. So sometimes you have to double check. Just something to think about. But usually they're right. So this this company, Lunar, they landed on the moon last Thursday. Stock did break through its all-time. Its IPO price was 10 because it started out as a SPAC, and pretty much all SPACs, not every SPAC, but almost all SPACs start out at $10. I don't know why. Does anybody know why? This huge candlestick That was intraday. It $135. It never got even close to $135. Like if you look at the line bar, the line graph, it gives you less information. It shows you the closing price on those days. So it got up to 80, and this is, it seems like every website I look at is different. I mean, and when I looked at Yahoo Finance, it peaked at 40 on Yahoo Finance. Let me lower this. This is what drives me nuts. So the highest closing price was $41 on Yahoo Finance on 2/13. But on this website, it's 82 on 2/22. But anyway, so the line chart is just it puts a point on the closing price each day, and then it connects those points. The reason the candlestick is different because the wicks show you the intraday movement. So you can see the bar part. So it's green. So it opened at 39. This is on February 22nd. It opened at 39 and it closed at 82. It's a pretty big day. But the wick is intraday. So it was trading as high as like almost getting close to 140 intraday. So maybe like at noon or 1, the stock price got pushed up to 140. But the bears took control and brought it back down to 80. So it closed at $80 on 2/22. The next day, it opened at 97. So there was a lot of post-market and pre-market trading. Because it usually pre and post, you don't see it that big of a jump. But so it got a lot of activity after hours and before hours. I don't know if it was after hours on the 22nd or pre-market on the 23rd, but I know it opened on the 23rd at 9:30 a.m., right? At 96. And then it closed at 21. Wow. It opened at 90 and 96. This is one day. This is because some of these, you could look at candlesticks for a month, a week, a year, but this is a one-day candlestick. It went from 97 to 21. It must have been from earnings. They must have had really bad earnings, or there was just a short squeeze or something. Does anybody know what happened on February 23rd to Lunar? Shares of Moonlander maker Intuitive Machines opens new tab. Opens new tab. The stock tumbled 30% in aftermarket trading, wiping out a Friday rally after the company said its spacecraft had tipped over shortly after touching down on the lunar surface a day earlier. Okay, so they said we touched on the lunar surface, but it tipped over. Didn't it also fall on the moon last week? Didn't they say the spacecraft fell over, so they weren't getting a signal? Luna close after hour might be a good buy, or maybe a good buy. Nice, Mark. Exactly. I don't know. I don't know about this. So ever since that, it hasn't. It did break through $10 on February. No, that's April 19th. So if you could have got it in February for $3, $4, but then it did break through the SPAC price on February 21st. But you would think February 22nd is when it landed on the moon. So it was this day. So people bought it before it actually landed on the moon. I guess they bought it thinking that it would be successful. Remember, Lucid was a SPAC and finally went public, and the stock went from 63 to at zero in a change in less than a day. So be careful of SPACs. Yeah. What do you mean from at zero? Or did you mean 30 and you put the at symbol? Oh no, 20. You meant 20 because you held in your shift button. And so you hit the at instead of 2. But I got it. Yeah, but I mean, how do you figure this stuff out? Maybe if you track the trading volume. So you see lots of trading volume. It's really hard to tell. Here's a chart. Okay, so it's right here. I don't know if you could see the top. It's right here, the volume. So on February 23rd, 100 million shares. So that's the most volume ever for the stock, 100 million on February 23rd. The 22nd, which was a day of, 40 million. So it just had this one green day, February 20th, which was Tuesday, 2 days before it landed on the moon. And then after the next following 3 days, it went down. I thought it went up 17% on Friday. It looks like it went down. Lucid went from 63 to 25. Got it. U.S. government doesn't want anyone going to the moon. Soon, no banks is going to lend to intuitive machines. Wait, well, I thought the U.S. government did want people going to the moon. Wait, is NASA not part of the U.S. government? NASA is I thought NASA stands for NASA is a U.S. government agency that is responsible for science. Yeah, NASA has a program where the Artemis program, where they're funding companies like Intuitive to go to the moon. Space stocks can be so volatile. Yeah, I wouldn't touch space stocks because it's hard to monetize what they do. It's not like a grocery store. Very easy to monetize buying and selling food. Bringing people to the moon, I don't know how long it could take. Like, it might not even happen in our lifetime. This is only the second time anybody's ever gone to the moon. And so to take a regular people like me and you to the moon, it probably won't happen in our lifetime. Dark side of the moon says no, big time. Well, let's see if we can. Does anybody use this? How do I get an RSI from FinViz? There has to be a way. It seems like. Oh, here it is. No, this is not. It seems like Yahoo Finance is easier to figure things out than FinViz. Okay, okay, here it is. RSI. It's just so hard to see it. Look how high it was, almost 100, which is like, don't even touch this stock. Is this line RSI? Does anybody know even how to? It's like so confusing. I guess this orange line is RSI. So right now it's so high, the RSI. It's a big sell. I guess it's not a good stock to buy. I don't know. I think it's easy to. I think Yahoo Finance is easier to read than. Meta is at 85. I guess if you're a swing trader, RSI makes sense. I mean, I'm a long-term investor. I had a lot of my Meta I had since 2017. So, and it's in my retirement account. So I'm not. I mean, it's kind of like if you own your house and the value of your house goes down 50%, it doesn't really matter. You still live in your house. Or if the value goes up, it's just when you sell it, it matters. But as long as you can ride out, if you're in your house for 20, 30 years, you just ride out the ups and downs. And just hopefully when you sell, it's not at a really low point. But even if it's at a low point when you sell, it's kind of like say you bought your house in 2000. It's just the same idea for a stock. Let's let's just say for argument's sake, your house increases in value roughly 1%. And then there's a big like sell off, and people are renting more and less people are buying, so it starts to come down. And then it's what the hell happened? There's got to be a better way to do this. Or maybe if I So if you bought your house in 2000 at 200K, and then it goes up about 1% a year on average, and then the peak up to that point, it's 380,000. So you're like, this is great. I almost doubled what I paid for it. And then there's like a housing kind of, like the housing market starts to bottom out. And then it would suck if you needed to move in 2013, like for whatever reason, like maybe you had a new job, or maybe you couldn't afford you had to downsize because you lost your job, and it would suck that you had to take a loss in the house, because after paying fees, you would have lost money. And if you would have just sold even a year before, you could have actually made a little. But then if you end up selling in 2023, you triple the value of your house. So you could pretty much sell your home any year except like these 3-4 years. If you happen to get unlucky and you had to sell, because you don't always choose when you sell. If you're getting older, you have to move to a retirement community. You don't really choose that. Like you're kind of forced into certain situations. But as long as you avoided these years, you made money on your house. It would have been great if you were able to sell for triple the price. But if you sold it almost double the price 8 years later, but if you happen to sell these times for whatever reason, it would suck. What are we waiting on? I don't know. I'm just kind of making a point that if you have a long enough time frame, you're probably going to be okay with stocks or real estate. But if your time frame is short, you might get unlucky, especially if you bought it here in 2008. You would have lost a lot of money if you were forced to sell after like 6 years because you lost your job, whatever. Mobile home going to be the rage when robotics take over completely. But I think this is funny. Kind of worked out to like what it might be in real life. Because I know a lot of people, like when I bought my home, I looked at how much money it was bought and sold for the past like 20 years. And I remember like somebody bought it like in I forgot what year, but I could look. Yeah, somebody bought it in 1989, like $400K. And then they sold it for like $320K. Come on. So that sucked for them. But whoever bought it in 96, then they sold it in 2006 for like $800K. So they killed it. They just happened to get in the right time. It's like stocks, I guess, too. Sometimes you end up, it's a little different because you usually don't sell your home on a whim. Sometimes if you're scared, you sell your stocks. But your home, it's kind of hard to sell. It takes a lot of coordinating and things like that. So I guess this Intuitive Machines is probably not a good buy, even though they landed on the moon. Because they're not going to be profitable for a long time. Look how much diluted shares they have. They have 17 million shares outstanding, 26 million diluted shares. So their shares could go up 50%. That's like a 9 million share difference. It could go up 50% if just the convertible securities convert to equity. Dollar cost average to Meta. Yeah. I should have done that when it was going down. The problem is when you dollar cost average, you run out of money at some point. Like you don't have an infinite amount of money. And it's hard to just sit on cash. Because say like it's January and you have $50K to invest. Your cash. Okay. And then you have investments. So 40K, and then you have 10K in investments. I guess, I don't know anybody who can do this, but, and then you put another 10K, now you have 20K investments. It's so hard to do that. Like if you have 50K, you end up investing it like right away in different things. I guess dollar cost average the best way you can do it is if you have, if it's like excess cash from your paycheck. So that makes more sense. So you have, you invest $1,000 every month. So in January, you have $1,000 in investments, and then February of 2,000 because you invested your 1,000 of January, 1,000 of February, and then 3,000. But the thing is, if there's a really good opportunity, you don't have the cash. You want to be able to invest a lot. If you see a stock crash, you need cash to invest. You can't wait. It takes you every month. You have to wait to get $1,000. So it's so hard to. I don't know. I'm just talking. It's kind of just investing psychology. I pretty much, if I have cash, I invest it. I don't like sit and wait. Like every month, I invest 10% of it. If I have cash, I just put it all into like usually the S&P index, or I'll buy a stock I like. I guess that's what I recommend to people. If you have cash, just put it all into the S&P index, and then whenever you see a stock you like, and if it goes down, sell out of the S&P 500 and put it into that stock. Wegro, investors always forget about past bubbles every time. Well, Americans hate a good value, and they love an overpriced stock. So when stocks are going up, like Tesla, Nvidia, when people are talking a lot about it, they love that. Like they jump on a bandwagon and they want to buy as much as they can. But when stocks start crashing, we hate that. They don't. Me included, I have a hard time. I have bought stocks when they've come down, but it is hard psychologically. Because you think, oh my God, it went down 30%. It's going to go down. It's probably going to come down another 20, 30%. So no matter how much it comes down, it was like that with Netflix. I mean, I think I did okay, but it's like, at what point do you buy it? So ever since I missed out on Tesla, I was pissed. I didn't get an opportunity. I mean, Netflix. I didn't get a chance to buy it. And then when it hit about 700, I'm like, sheesh. I wanted to buy it when it was 20. And I didn't. And I kept waiting for it to come down, and it didn't. And then it hit 700. And I'm like, God, I could have made a ton of money. So I saw it come down to 600. I'm like, not going to buy it. Look what I bought it for. I think I know how much I bought it for, but yeah, 388. Then it went to 500. I didn't buy it. 400. I didn't buy it. And then 388. So I bought it. So a lot of times when you ask a friend, oh my God, like Meta is $200 a share, or Netflix is $500 a share, should I buy it? And no matter at what price point, they always going to say the same thing. I think it has a lot. It's going to come down another 20%. So they say, wait, it'll come down another 20%. Then it's 400. No. It's going to come down another 20%. Then it's 300. Then it's 200. No. Wait. It's definitely going to come down. And then it starts coming up. Then it goes from 200 to 300. And then you don't want to buy it because it was just 200. So like, I'm going to wait because I know it's going to come back. And then it goes to 400. Like, oh, I missed it. Okay, I know it's going to come back. And it goes, so it's like, you just got to buy it at some point. So I bought it right here, and I was down. It was 388, and it got down to like 170. So I was down 56% for my investment. I waited, I think it was like 680 was the peak, and I waited till it got to 388. So I waited till it came down 43%, and then I bought in. And then for my starting point, I fell 56%. So it's like, oh God. I'm like, I can't win. I'm like, I'm down 56%. Of course, now I'm like, oh, I should have just bought more. I should have sold out, but like buying the dips on quality stocks when possible and just buying small amounts. I always think, relax, the next tram is sure to come. But if you look at any stock, any good stock over a really long time frame, like if you bought Netflix in 2005, 2011, even right here in 2016, it looks high, right? It looks high because it's comparing it to when it was $5 a share. But even if you bought it anytime here, as long as you have a big enough time frame, now 2016 looks like it's so low, right? As long as you have like a 5-10 year investing horizon, you're going to make money on a good stock. I mean, if you invest in garbage, you're probably not going to make any money. But if you identify a good company, like an Amazon, like even a Walmart, or probably even AT&T, even though you might have had to wait a bit longer than 5-10 years, but so right now it's trading at, well, yeah, this would be a rough one. It's trading at 30-year from back in 93. So it's back to where it was trading in 93. So I guess if you waited 30 years on this one, you'd be flat, but this didn't work out. Netflix was in the hundreds. I missed that on. But I guess if a company goes bankrupt, doesn't matter when you bought it, whether you bought it when it was $1 or $1,000. If a company eventually goes bankrupt, you would have lost 100% of your investment. I guess the same thing when you short a stock. Doesn't matter if a company goes bankrupt. Doesn't matter if you shorted them when they were 100 or when they were $1. You're going to make money. So yeah, so this company Lunar, pretty weak balance sheet. They have their total liabilities are 100 million. The current liability is 100 million. Current assets are 50 million. So really bad current ratio. In 2002, that would be amazing. Yeah, but Amazon, if you bought it in 99, you would have been down. Like if you would have bought it, say at the peak, they've done a lot of reverse stock splits, so it's hard to tell, but it looks like $4. It wasn't $4. It's probably like $200 with all these splits. But let's just say you bought it $5 in 1999. It's so hard to even look at this chart. say like in 1999, you invested $10,000 into Amazon. And then in 2000, it's so hard to tell on this chart, but say you had 30,000 and you were loving life. Let's make it even better. Say in 98, you invested 10,000. 99, 30,000, 2000, 90,000. You were probably loving life. You were like, oh my God, I can't believe this company that sells books, I'm making so much money. And then in 2001, it goes from 90 to like 8,000. It went down over 90%. And then .com, and you were like, oh my God, I had $90,000. And then in 2002, it's like 15. So you sell because I can't. It's gonna go back down. I know it. They sell books. So you sell 15 at 50% gain. So you're happy. You bought in at 10,000. And then in 2003, your 10,000 would have been 25,000. So you're like, oh boy, I should have held. And in 2004, it's like 50,000. And then in 2008, it comes down to like 30,000. She's like, oh, thank God. It's probably going to come down, probably going to go bankrupt. And then by like 2012, it would have been like 150,000. And you're like, oh my God, I could have sold it. But if you looked on like 2018, it would have been like 2 million. Or 2023, it would have been like 3 million. So that 10,000. But how do you know that stuff, right? When do you, but no one's gonna, even if I told you this book company is the future, you wouldn't have sat on it for 25 years to realize you would have probably sold. If you didn't sell in 2000 when it hit 90, you probably would have sold like when it hit 50 in 2004. Because it didn't really like shoot like a rocket like Nvidia. I mean, it went like down in 2001. And I mean, in 2007, it was pretty much back to 99 levels. It started blowing up from 2009. It was like $3 again. Then it went to almost 40. I mean, but of course, it's even like, and now it's at 180 almost. So you could have had a $3 a share back here, and you could have 60x'd your investment. Okay. Anything else? ZS earning 229 AMC on Thursday. Wait on Palo Alto until ZS earnings, unless ZS does. Oh, you think so? You think a Z-scaler? You think if they go up, Palo Alto will? Is that what you're trying to say? Z-scaler. That's down. I wonder why it's down so much. It peaked in 2021. It's still trading well below those levels. I know that their revenue is up a lot. Like it went from 400 million to 1.8 billion in just 3.5 years. Zscaler. Are they like an AI play? Zscaler is a cloud security company with headquarters in San Jose. Company offers enterprise cloud. Jay Chowdhury. That sounds familiar. IPO company, turn on Nasdaq. Yeah, we'll see. Okay, so I guess I'm gonna go. I'll finish my video on what's it called? On intuitive networks. I'm working on this intuitive video. It might not get that many views as I thought, because I thought with the moon landing it would be like a hot stock. But okay, well, thanks for joining. I'll talk to you later.